Preparing for a financial analyst at AB InBev interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to become a financial analyst at AB InBev? I want this role because AB InBev combines global scale with a fast-moving consumer business where analysis directly affects commercial decisions. I am attracted to the company's portfolio, including brands such as Budweiser and Corona, and its focus on performance and disciplined execution. My strengths are financial modeling, explaining variances, and partnering with non-finance teams. I would enjoy turning market, volume, pricing, and cost data into practical actions that improve profitable growth across markets. While answering, connect your analytical strengths to AB InBev's global brands, scale, commercial complexity, performance culture, and opportunities to influence decisions through forecasting, reporting, and business partnering. Question 2. What financial metrics would you monitor for AB InBev? I would monitor revenue growth, volume, pricing, and mix first because they explain the quality of top-line performance. I would then track gross margin, EBITDA, EBITDA margin, marketing investment, operating cash flow, working capital, net debt, and market share. For a brewer, input costs such as aluminum, glass, barley, energy, and logistics are also important. I would compare actual results with budget, prior year, and forecast, then investigate whether performance is structural or temporary. Make sure to cover revenue growth, volume, price and mix, gross margin, EBITDA, market share, working capital, cash flow, leverage, and the importance of comparing performance with budget, prior year, and competitors. Question 3. Walk me through how you would build a monthly forecast for AB InBev. I would begin with actual year-to-date results and reconcile them to the latest forecast. Revenue would be modeled by market, brand, channel, volume, pricing, and mix, including known promotions and seasonality. I would separately forecast key input costs, packaging, logistics, marketing, payroll, foreign exchange, and working capital. After producing a base case, I would test downside and upside scenarios. Finally, I would review assumptions with sales, procurement, supply chain, and management before finalizing the forecast. In your answer, talk about historical trends, volume assumptions, price and mix, promotions, commodity costs, foreign exchange, operating expenses, working capital, scenario analysis, and review with commercial and operational stakeholders. Question 4. How would you analyze a revenue shortfall in one of AB InBev's markets? I would bridge the shortfall from budget into volume, price, mix, channel, geography, and timing effects. For example, lower revenue might reflect weak premium brand demand, distributor inventory changes, or an unfavorable shift toward lower-priced products. I would validate the data against shipments, sell-through, market share, promotions, and competitor activity. Then I would quantify each driver, distinguish temporary timing from structural weakness, and recommend actions such as targeted pricing, improved execution, or revised production and marketing plans. Be sure to mention decomposing revenue into volume, price, mix, channel, geography, and timing, validating data, identifying root causes, quantifying impacts, and recommending commercially realistic corrective actions. Question 5. Explain the difference between gross margin and EBITDA margin in a brewing business. Gross margin measures revenue remaining after direct production costs, including ingredients, packaging, manufacturing labor, and freight where applicable. EBITDA margin goes further by deducting operating expenses such as sales, marketing, administration, and other recurring costs, while excluding depreciation, interest, taxes, and amortization. In brewing, higher aluminum or barley costs can compress gross margin, while promotional investment or distribution expenses may pressure EBITDA. I would use both metrics to separate product economics from broader operating discipline. Focus on revenue less cost of goods sold for gross margin, EBITDA after operating expenses, the effect of ingredients and packaging, selling costs, marketing, depreciation, and how each metric supports different decisions. Question 6. How would you evaluate whether a price increase is financially successful? I would not judge the increase solely by reported revenue. I would compare the realized net price with the volume change, promotional spending, mix, market share, and competitor actions. The key calculation is incremental gross profit, price benefit multiplied by remaining volume, less any lost contribution from volume decline and additional trade investment. I would also examine consumer and retailer response by channel. A successful increase should improve contribution and support sustainable economics without damaging brand health or distribution. While answering, address volume elasticity, net revenue, trade promotions, mix, gross profit, competitor pricing, consumer response, market share, and whether incremental profit outweighs lost volume or distribution. Question 7. What is working capital and how could AB InBev improve it? Working capital is the cash tied up in receivables, inventory, and payables during normal operations. I would monitor days sales outstanding, inventory days, payable days, and the overall cash conversion cycle. AB InBev could improve cash by tightening credit and collections, aligning brewing schedules with demand, reducing obsolete packaging or finished goods, and negotiating appropriate supplier terms. However, I would protect customer service and production continuity because an aggressive reduction in inventory could create stockouts or lost sales. Make sure to cover receivables, inventory, payables, cash conversion cycle, distributor terms, seasonality, production planning, supplier negotiations, and the need to avoid improving cash at the expense of service or relationships. Question 8. How do foreign exchange movements affect AB InBev's financial results? Foreign exchange affects AB InBev through transaction exposure on purchases, debt, and other cross-border payments, and through translation when foreign subsidiaries are consolidated. A weaker local currency can increase imported input costs or reduce reported revenue and EBITDA after conversion into the reporting currency. I would separate reported growth from constant currency growth, quantify the exposure, and understand existing hedges. I would also assess whether the impact is cash-related, accounting-related, or likely to persist operationally. In your answer, distinguish transaction and translation exposure, explain income statement and balance sheet effects, discuss hedging, constant currency analysis, and the difference between reported and underlying operational performance. Question 9. How would you assess a marketing investment in a major beer brand? I would evaluate the campaign against a clearly defined baseline, measuring incremental volume, net revenue, contribution profit, market share, and brand health indicators. I would separate true incremental sales from normal seasonality, distribution expansion, promotions, or competitor weakness. Where possible, I would use test and control markets or pre- and post-campaign analysis. The decision should consider both short-term return on marketing investment and longer-term brand value, since a campaign can be strategically useful even if immediate profit is modest. Focus on incremental volume and revenue, contribution margin, brand equity, customer acquisition, market share, campaign timing, control groups, attribution challenges, and return on invested marketing spend. Question 10. Tell me about a time you found an error in financial reporting. In a previous reporting cycle, I noticed that a month-over-month expense variance did not align with the underlying purchase activity. I traced the issue to an invoice posted to the wrong cost center and confirmed the error with procurement. I assessed the impact, corrected the entry before submission, and explained the variance clearly to my manager. I then added a cost center validation check to the monthly review. That experience reinforced the value of investigating unusual movements rather than accepting system outputs automatically. Be sure to mention the analytical procedure that identified the issue, materiality assessment, root cause investigation, stakeholder communication, correction, control improvement, and how you maintained accuracy under time pressure. Question 11. How would you explain an unfavorable EBITDA variance to a non-finance manager? I would start with the headline, EBITDA is below plan by a specific amount and percentage. Then I would use a bridge showing the effects of volume, price, mix, commodities, logistics, marketing, overhead, and foreign exchange. I would distinguish controllable drivers from external factors and explain each in commercial language. For example, lower premium mix may matter more than total volume. I would finish with clear actions, owners, timing, and the expected financial recovery rather than presenting variance analysis as mere historical commentary. Talk about using a simple bridge, separating controllable and uncontrollable drivers, quantifying volume, price, mix, cost, and FX effects, avoiding jargon, and ending with actions and ownership. Question 12. What would you include in a financial model for a new brewery investment? I would model the investment timeline, capital expenditure, commissioning, production capacity, utilization ramp, product mix, pricing, and expected market demand. Operating assumptions would include ingredients, packaging, labor, utilities, maintenance, logistics, marketing, taxes, depreciation, and working capital. I would calculate free cash flow, NPV, and payback, then test sensitivities around volume, price, construction cost, commodity inflation, and exchange rates. I would also include execution milestones because delays can materially reduce returns before the brewery reaches steady-state production. In your answer, cover capital expenditure, construction timing, capacity, volume ramp-up, pricing, product mix, operating costs, working capital, taxes, depreciation, financing, NPV, payback, and sensitivity analysis. Question 13. How would you investigate rising inventory at AB InBev? I would first split the increase between raw materials, packaging, work in progress, and finished goods, then analyze it by plant, brand, SKU, and market. I would compare inventory with forecast demand, production plans, seasonality, distributor stock, and service level targets. The issue could be deliberate buildup before peak season, weak sell-through, inaccurate forecasts, or production inefficiency. I would quantify aged or excess inventory, assess write-down risk, and recommend production adjustments, promotions, transfers, or procurement changes. Make sure to cover inventory by stage and SKU, demand forecasts, seasonality, production schedules, distributor inventory, aging, obsolescence, working capital cost, service levels, and corrective planning decisions. Question 14. What Excel or data analysis tools would you use in this role? I would use Excel for driver-based models, variance bridges, scenario analysis, pivot tables, XLOOKUP, SUMIFs, and sensitivity tables. Power Query would help clean and combine recurring data, while dashboards could make trends in volume, pricing, margin, and working capital easier to monitor. I would also learn AB InBev's ERP and reporting tools quickly. My priority is not complicated formulas for their own sake. It is building transparent, controlled analysis that stakeholders can review and use confidently. Mention advanced Excel functions, pivot tables, Power Query, dashboards, data validation, scenario models, ERP or BI systems, automation, auditability, and communicating insights rather than relying only on technical skills. Question 15. If management asked you to reduce costs quickly, how would you respond? I would clarify the savings target, timing, scope, and constraints before recommending actions. I would analyze procurement, packaging, logistics, manufacturing efficiency, marketing, travel, and overhead, distinguishing recurring savings from temporary deferrals. I would prioritize opportunities by value, feasibility, and risk while protecting product quality, customer service, and brand investment. Each initiative would have an owner, baseline, implementation date, and tracking metric. I would present the financial impact alongside operational consequences so management could make an informed decision. Focus on clarifying the target, separating structural savings from timing benefits, analyzing spend categories, protecting brand and service levels, quantifying trade-offs, and establishing measurable implementation and follow-up controls. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.